Welcome to the Sharkpreneur podcast with Kevin Harrington and Seth Greene. Kevin Harrington is the inventor of the infomercial, one of the original sharks from the hit TV show Shark Tank, and has generated over $5 billion in TV and digital direct response sales. Seth Greene is the world's first trusted authority on cutting-edge direct response marketing, a best-selling author, and the only 3-time Marketer of the Year nominee. On the podcast, Kevin and Seth interview sharkpreneurs who share straight talk on what it takes to explode your business.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.
Welcome to the podcast. This is your host, Seth Greene. Today I have the good fortune to be with Kevin Gwynn White, the co-founder of the Exbo Group. He's been the acting chief financial officer of over 20 growth companies. He brings over 15 years of experience in M&A advisory, virtual venture capital, and growth stage operations. We're going to hear he got his MBA from Columbia Business School. He is a CPA in the state of New York. We're going to find out all about the rest. Kevin, thanks so much for joining us.
Thanks for having me, Seth. Appreciate it.
Our pleasure. Let's go back in time a little bit. How did you get started?
Oh, yeah. I could talk a little bit about the Genesis Expo Group, but my career in general, I started working right out of college at Ernst & Young, and I worked there for a decade. I worked in their business advisory, sort of performance improvement and strategy group. And then I worked in their transaction services M&A group. And it was critical time for me learning consulting and just understanding how finance functions work at companies and what things might go wrong. After my time there, I started working for a venture fund called Rethink Education. This is while I was actually in my MBA, I was doing a graduate fellowship at them and helped them with investment sourcing and the M&A side of things, get my background in EY, but then quickly realized that a lot of the portcos just needed a lot of help getting over the sort of Series A, Series B hump in terms of just getting really good reporting and creating a good financial narrative. They were struggling. And so I always had a major passion for working with CEOs and founders and working with folks that are passionate about their businesses. I really like the operations piece of things. And so I put on my consulting hat and started to help. And it worked really well. We had 2 really successful Series Bs that were transformed just based on doing a little bit of work in the back end to help the companies be able to pitch better, to be able to describe their story better and look good to investors in the next fundraising round. So the partners of the fund were like, hey, this is working really well. Why don't you go do this? I said, great. I started Expo Group as a separate entity. It was important that we were doing work directly with the actual companies themselves versus through the fund. Because if you're doing work for the fund, you're always looked at as the watchdog, right? But if you're contracting with the companies themselves, they're really looking at you as critical advisor. Started doing that. That ended up being really successful. And that while we didn't take any money from that fund, they certainly seeded us with initial clients. And we didn't do any what I would call formal business development in the beginning. I took some meetings here and there, but the demand was so high that the CEOs that we worked with became major referral sources for us because they were really grateful for the help. We were helping them in pivotal moments for them. And we grew from there. We're 57 people at Expo now. We focus on CFO and controllership advisory is a big piece of it. The other one is transaction services, working with the funds themselves to quality of earnings, financial due diligence. And then we have a tax group that kind of straddles both. But yeah, it's been an amazing journey. And man, have I learned a lot in the last 8 years for growing a company.
That is absolutely incredible. And the longer version should probably be in a book somewhere if it isn't already. So who is an ideal Expo? Talk a little bit about what Expo does now and who an ideal client for you is.
Yeah, sure. So I'll go through the business lines. We work with companies between $1 million in top line and $200 million in top line. So it really runs a pretty big span through venture, through the lower middle market into middle market. Companies below, I'll say 20 million in top line, 50 million top line. We are typically, not always, but typically the entire outsourced finance function. So that means that we're the accountants, we're the controllers, we're the CFOs, we're everything. And we're really interfacing with the board very closely. interfacing with management very closely. You start to get 15, 20 million plus of revenue a year. Then it really takes one of two forms. That's out of the business. It's either we're reporting to CFO and we're the whole outsourced controllership practice, or really commonly we work with some of these bigger funds. They go out, make a middle of market investment. The CFO who was there before the acquisition doesn't really usually want to stay on and do the very different job that's required of them post-acquisition when there's an institutional board. Or they do want to do it, but the demands on them are much higher. And so they need a team to come and support them. And we're often installed by the investor to support the finance function of the company that they just bought. And then we help set up the key KPI packages, help remediate some of the accounting, et cetera, until they're able to scale that team up worth a pressure valve. So that's a big piece of what we do on the CFO controllership side. On the transaction services side, that's more technical accounting work for PE funds, quality of earnings. If there's an acquisition happening, we'll do the QE for typically the buyer. Sometimes we do sell-side QEs too. We work with bankers, do sell-side QEs. And then we do a lot of post-close work, company closes. We do purchase price accounting. We do opening balance sheet. We help with the working capital negotiations, really focus on all the things that need to get closed out once the deal actually goes through. And then finally, we've got that tax group. And like I said, that straddles both sides of the business. Tax focuses on the transaction services side, tax due diligence, right? It's going through all of the historical filings, making sure everything was filed correctly, looking at sales tax nexus, which is always a huge one. I'm sure if you're an M&A, you can appreciate how sticky that is right now. So looking at this sort of sales tax implications of the buy. And then on the sort of corporate CFO side, tax is doing, as it expects, income tax compliance and filings, R&D tax credits, sales tax management, things like that. We try to be a holistic finance support group for these companies that both can help transform their accounting and transform their finance functions. But then also, this is what sets us apart from a lot of the middle market consulting, boutique consulting companies, is actually plug in resources that can support folks on an ongoing basis.
That makes a lot of sense. How are those companies finding you?
Yeah, so it's interesting. I would say a lot of the time we have relationships with the funds, right? So the funds know that we're really good. They'll go out, they'll do a funding event, or they'll be considering a funding event, or they'll do an acquisition and they'll say, you really should work with Expo Group. These guys are transformative in terms of really taking a finance function and overhauling it into something really special and that works efficiently. So often we're referred through the investors, and maybe 2/3. And I would say a third is that the CEOs of the companies themselves we're with a lot of people when they have their moment, right? A lot of times for some entrepreneurs, they're raising a Series B, Series C, and all of a sudden their company is going to be worth $150, $500 million, right? Who knows, right? Depending upon the client that we work with. And obviously that's a nerve-wracking process when you're going through a fundraise and your wealth is changing, the company's valuation is changing, and we're held on as a safety blanket in a lot of cases by these CEOs that are navigating something, a big deal like this for the first time. And so when we get them to the other side and we get good outcomes, we get a lot of sort of fanatic CEOs that will refer us and really appreciate us because we create a lot of value in their time of need. So I would say it's the other third. That's mostly where it's coming from. And then in terms of marketing, where we do have a BD function where we've got a couple people that we hired from other middle market consulting companies, and they do outreach. But I would say that a good amount of work from us still comes just from a referral basis.
That makes a lot of sense. And that speaks volumes to the work that you're doing, that people are telling others about you. You've grown such a large team and you've grown so fast. How do you manage for that type of growth?
Yeah, it's tough in professional services, especially if we're bootstrapped, right? So double-edged sword, we haven't taken any outside capital. We don't have a private equity board breathing down our backs in terms of hitting targets is the plus to that. And the minus to that is you have to be very careful with the speed of growth. And the reason being, and folks with finance backgrounds will appreciate, if it's a professional services company, you do the work first and then you invoice, and then that invoice might get paid 30, 45 days later. And so what that means is practically on any given project, you're paying out the salaries of people doing the project, and then you're collecting the money on that work way later, right? So in a vacuum, you're cash flow negative from the moment that you start the project, right? That's all fine if you have a cash basis that you've saved up and can deal with. But if you start to grow really fast, it'll actually eat into that. And then you start to look, someone who doesn't have a finance background might be looking at their net income and be like, I'm making so much money. Why don't I have cash? But the reality is if you're growing, the faster you grow, the more cash you eat. And there's definitely some science behind understanding what kind of work we can take and at what pace, and matching that sort of with the hiring resources. I would say the key at all times is just really, this is the advice that I would give to any company, not just professional services, really strong financial projections, like really understanding what you think your next quarter is going to look like in terms of spend and revenue. And then every single month you come in and you look at, all right, I expected to have XYZ dollars of revenue this month, and I was above that or below that. If I'm below that, you got to slow hiring to make sure that you're not over hiring and burning too much cash. And if you're above that, you got to hire faster to make sure you have the capacity. The key is to just check that every month, right? You don't wait a quarter. You don't wait half the year to see how you're doing. Every single month, you just want to make sure you're understanding, what did I forecast? How did things actually shake out? And how am I going to change my strategy as a result? I tell my clients, if you're going to change your cost structure, your company, if you're going to reduce your cash burn in any way, you have to make decisions now that will impact your cash burn 3 months out, right? Because if you're going to change your headcount, if you're going to not deploy a certain software, if you're not going to buy something new, you need to know that now so you can cut your burn 3 months in advance, right? If you only notice that you need to cut burn and you need to do it immediately, you're already three months too late. And so the projections are really critical in making sure you're matching your growth pace with sort of your overall cash.
I definitely second that. So you've achieved so much and helped your clients do even more. What's your biggest challenge now?
Yeah, ours, I think we have moved up market pretty considerably. So like I mentioned, we started really in the venture space around that venture client. But now I'd say half our work is coming from lower middle market private equity type clients. And that's a lot different. So we're working with Goldman Sachs Asset Management, and we're working with Aqualines and these bigger PE funds. And we're talking about much bigger deals. And so for us, we have this unbelievably capable team that's really good. We've gotten an outstanding talent pool. It took us years to develop, but there's really solid folks that work at Expo now and really know what they're doing. And they're tremendous FP&A people, but they're used to holistically running finance functions for venture companies, which they're very good at. And now as our work has split more on the private equity side, a lot of what we're doing is training people how to do traditional consultants, right? So we obviously went out and hired a lot of great former Big Four consulting types that know how to do this right off the bat. And now it's those experienced consulting resources training the existing team how to think a little bit more on a project basis. It's something that I wouldn't call it a huge pain point for us because our team is smart. And so they're able to get over the curve quickly. But there's a culture shift in the company to thinking of, hey, I'm here to be a fractional CFO to, hey, I'm here to be an advisor. And there's just a little bit of growing pains with that. But over time, as people get more experience with it, it smooths out.
Your passion is obvious. What do you like best about what you're doing?
When I worked at bigger companies, when I worked at EY, I worked on really cool projects. I worked in the transaction group. I worked on the Dow DuPont merger quite a bit. And that was, at the time, I think it was the biggest merger, or maybe the second biggest merger in history. And so much of the firm was working on transaction services teams were working on that. And it was academically a really cool exercise because you're modeling out the business, you're understanding synergies, we're working with chemical engineers to figure out what factories can be consolidated based on certain chemical throughput. Like it's intellectually really stimulating. But at the end of the day, a lot of the people, they're there for their career, but the project itself is meaningful to them in the sense they get to come to work and flex their intellectual muscles. But there's not as much passion as there is in the startup space. When you work with CEOs directly, CFOs directly, a lot of these folks, they founded these companies and they grew them to $50 million. It's their baby. It's their entire life, professional life, working in what their output was. It's everything that they created over a 20-year period or whatever it is. And so working with people that are in that situation is really energizing because they listen very carefully to what you have to say. If you're an expert, they'll tell you when they think you're wrong, even if you're giving good technical advice. And they just really care and appreciate the work that you're doing in a very deep way because it impacts something they care about so much. It's a double-edged sword sometimes because people who are fanatical about the businesses they've created, they sometimes can be harsh on the team, or they're sending emails on Saturday at 8 p.m. because they're living and breathing it all the time. But the flip side is that you're working with people that just really care. And that really transforms sort of the way you look at coming into work every day, because it has such an important impact on something someone's really passionate about.
That is awesome. For our folks who are watching or listening, where is the best place for them to go to learn more about you and all things Expo?
Yeah, so you can find us on our website. It's probably easiest. It's Expo, EXB as in boy, group.com. There's a contact form if you want to reach out there. And that's the best way to get in touch with us. You can also just learn a little bit more about our business, our service lines, what we do. But I'd love to hear from you.
Awesome. We know your time is incredibly valuable. We greatly appreciate you spending some of it with us.
Super. Thank you so much, Seth. I really appreciate you having me.
Thanks, everybody. This has been Seth Greene with Kevin Gwynn White from the Expo Group. Kevin, thanks again for joining us. Thanks, everybody, for watching or listening. We will talk to you or see you next time.
Why do so many businesses struggle while others seem to explode overnight? Do you wish you had the secret to this type of exponential growth? Now, I've scaled more than 20 businesses to over $100 million, and it's not just luck. In my new book with Mark Tim, Mentor to Millions, you'll learn the repeatable framework I use in all my business ventures for massive success. Order at kevinmentor.com and get over $1,000 in bonuses. Head to kevinmentor.com.